Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup and the market strategies you need to follow for this session as well. Now, we'll start off by understanding what happened yesterday. It was another bearish session on D Street. Despite the supportive global cues that we were seeing, it was the Indian equity markets that reacted after a day's gap to the tariff impact of 50% tariffs that have been imposed on the Indian market to the exports to the US as well. Now, of course, it was also the monthly expiry session as well that also led to a lot of volatility in trade, and the markets set a foot on the expiry session with a weak footing. Throughout the course of the day, there was further pressure and we ended at 24,500 levels as well, down 211 odd points, and all the sectors also down in the red, barring just slight gains on consumer durables. Now, of course, a new F&O series begins today for the Nifty, and a series full of changes as well. So starting this series, we actually do know that the NSE weekly contracts move to the Tuesday expiry, while those of BSE move to Thursday. So those will be the two big changes for the derivative players and for traders to really keep a note of as well. Now, another change the bulls will definitely hope for is the change to the selling spree currently ongoing, particularly after the 50% tariffs from US, exports from India to US have taken place from Wednesday. Now, the last four sessions have already seen the Nifty decline by about 600 points. The Nifty Bank has been a bigger underperformer. We've seen it decline by 2,000 points in the same period, and that the hope is that there should be some respite from this selling spree as well. What happened overnight on the US markets? Well, they hit another high after their data showed that the economy has expanded faster than initially estimated. The S&P 500 index, the tech-heavy Nasdaq, they closed higher in trade. And we also did see that following the US markets, even the Asia markets traded slightly mixed in the morning trade today. We did see even Japan's Nikkei, however, it was down by about 0.3%. South Korea's Kospi fell slightly by about 0.17%. But we did see some of the other indices continuing to climb higher in trade, like the China, the Hong Kong index, for instance, was seen outperforming almost 1% higher in trade. The Gift Nifty is also indicating a mild start to the trading session, so we'll see how the trade really pans out today. Of course, there'll be a lot of focus on heavyweight counters, especially Reliance Industries, because of the AGM that will come in today and will start at 2 p.m. All eyes are on what kind of announcements will really come in, and will there be any signs of IPOs of retail or Geo to be announced in the course to follow. Let's actually welcome our guest on board. We are now joined by Mr. Mayuresh Joshi, who is joining in on the program to share with us his views. He's the head of equity research at William O'Neill India. Warm welcome to you, Mayuresh, and thank you so much for taking the time out. Let's start off with the big news that we are covering today. In fact, there are two of them. One is the RIL AGM, and the second one will be the Q1 GDP update that we'll be getting in the evening as well. What is your key expectation from RIL AGM today?
Morning, Sakshi. No, again, I think the announcements largely will be hovering around their new energy projects,
Yes.
and status thereof, and some element of news in terms of indication of the Geo demerger, if any, from the AGM. But I think it shall be business as usual, because what we've probably seen in their core business when it comes to refining or petchem, I think it's largely driven globally as we speak, and there is a lot of global uncertainty. So outside the normal aspects of business or petrochemicals and the refining part, I think the new energy vertical and anything related to Geo, I think those are some key announcements that the markets might not watch.
Right. Now, Mayuresh, also wanted to understand with respect to the IPO anticipation that we have from Reliance Industries on both retail and Geo, what is your expectation on that front?
I think it should come about. I mean, AGM might not be the right forum to probably do it if it happens well and good. But at some point of time, I think both these IPOs, which are much awaited, should probably come through. And you've seen a significant amount of improvement in core dynamics for both these business verticals internally as Reliance posts its numbers. So I think it's just a matter of time, in my opinion. And they will probably be looking at market conditions as well, which might be a little bit more lucrative, getting us out of this uncertainty phase, either or. But I think it's just a matter of time that these announcements might just come through.
Right. On specifically the price point at which Reliance Industries is trading, how do you really see the outlook going forward from here? We've seen a long haul consolidation. There's been an attempt to recover the stock as well from about 1100 odd levels to all the way back to above 1400. How is the price position? What is the valuation currently? And how do you expect the stock price to move forward?
No, valuations are fair. So I think one, I think expectations in terms of the demerger for both Reliance and Jio, I think that is one awaited news which can create significant amount of value unlock for Reliance. The second aspect, as I just mentioned, was their core business itself. I think there are a lot of global factors at play when it comes both to the refining as well as the petchem business. And therefore, I think the business dynamics should gradually improve as we get into this uncertainty of Trump tariffs across the globe, how much of an impact does that have on demand, etc. And therefore, I think these businesses, which are the core for Reliance outside geo and retail, should have a steady state progress over the next few quarters. From an immediate short-term perspective, the moment of how crude moves, GRMs, expectations in terms of demand-supply dynamics, petchem deltas, all that will probably keep revenues in check. And therefore, I think the stock might just consolidate. However, I think any news, as I said, in terms of geo and retail, the ratios thereof, if they're favorable to the shareholders, might have a positive effect. In my own sense, and what we look at William O'Neill India, I think the stock might go through a phase of consolidation. Let's see how Q2 numbers play out. Let's see how the tariff scenario unfolds, and let's see how demand supply dynamics play out, specifically in terms of both the refining business as well as the petchem business.
Okay, let's move on. We'll come back to Reliance in a bit and overall talk about what's at hand as far as the market mood is concerned. Now, we do know, Mahesh, that the entire August series we've seen turning negative because all the gains were wiped out towards the end of the last 1 or 2 weeks because of the tariff-led news flow. What's your expectation for September? Because we have some domestic cues that could probably aid recovery or sentiment, and that could be by way of the GST Council meeting that's to be held on 3rd and 4th of September, and that's likely to put the finalization on the two-slab structure that we are expecting and lead to a lot of rate cuts on a whole host of industries and sectors. How are you looking at that? Will that provide some cushion?
It should, Sakshi. And again, I think the base case scenario here is that we continue with the 25% additional tariffs, which might have a 60 to 80 pips on our GDP. But with GST rationalization expected to take place sooner, as you're just mentioning, I think that cushioning off starts coming through, and that impact that might get felt because of the tariff factor might start coming off because of domestic consumption actually getting a huge boost. Having said that, I think the expectations in terms of significant amount of demand accretion happening can be a reality. You've already seen green shoots in terms of rural consumption because of better monsoons. Tax cuts will lead to better urban consumption as well. So I think with these base factors at play and rate rationalization that happens with the festive season coming around as well, that can have some element of accretion in terms of how demand comes back very, very strongly across sectors and various sectors at that, boosting revenues for a lot of industries. However, I think a few industries which get impacted because of Trump tariffs might still feel the brunt, which might include textiles, your shrimp producers, a few of your gems and jewelry exporters as well.
Absolutely. These are very important points that you mark out, and we will just delve into each of these points into detail as well. Meanwhile, just wanted to highlight for our viewers 113 points lower as far as the pre-open trade is concerned. 24,429, it's improving. We had at one point slipped to 24,200 in the pre-open. So let's see how it settles. It will be important to see the levels at 907, 908 in trade today. Let me come to the tariff part. We have discussed this, with a lot of aspects into focus over the last couple of weeks, Mahesh. Now, we've been slapped with a 50% tariff rate. We still are, hopeful that there could be some negotiation going forward. There could be some breakthrough that brings down this level to a more, convenient level to some of the export-oriented sectors so far. But right now, given this current situation, you did say that, some of the sectors like gems and jewelry and textiles are going to be bearing the brunt for it. How do we deal with that brunt? Do you think the onus is on the government to provide some kind of a subsidy, hand-holding or financial assistance to at least till the time negotiations are brought into focus, handhold these industries so that the pinch is not as sharp?
So the government is making its efforts, right, in terms of trying to cushion the tariff impact on sectors. You've already seen what they've done with cotton prices as far as the imports is concerned when it comes to raw prices. Again, I think in terms of expectations, I think the government will provide the necessary support that these industries require. But again, I think there is a lot of uncertainty, right? If this rollback happens, what is the timeline? Will it take 2 weeks, 4 weeks, 2 months? Nobody's sure about that. And that impact and uncertainty is something that will play out on numbers for specific stocks within these sectors itself, which are largely attuned and focused on US exports. Therefore, I think there might be some element of periodicity of pain. The hope here, Sakshi, is that we enter into some element of negotiations, and those negotiations are successful as far as additional tariffs are concerned, as well as the base case scenario. And if that probably happens over the next few weeks or next few months, that might be positive, and then sentiments might turn back because earnings might start coming back once the resolutions are done. But till that point of time, I think earnings might just take a backseat for these sectors. And therefore, I think a lot of these domestic-oriented sectors, because of the push through on GST rationalization and demand coming back, might actually continue doing well. And again, selective sectors in the domestic space have actually no impact or no bearing as far as Trump tariffs are concerned.
Absolutely. Let's also discuss, some of the sectors that could be probably looked at while these uncertainties are ironed out in due course as well. Mayuresh, what would your key focus be outside of the tariff-bound sectors? Where do you think in the interim to get over the volatility, it will be better to shift some focus at least for the next couple of months?
Consumption, I think consumption within consumption, FMCG as a basket has started doing well. The numbers for the last quarter were decent. Commentaries were decent. With rationalization, volume growth expected to come through, input costs which have stabilized, margins should show a reasonable amount of an uptick as well. And therefore, I think this sector is one sector that can have a very strong operating leverage at play. So this is one sector I would definitely keep my eyes on. The second element within domestic consuming sectors might actually be a lot of these capex-oriented themes which are domestically driven. Government capex is going very, very strong. Even if there is some element of pullback on government capex, if there is some subsidy support that is probably required, and to manage the fiscal balance if Trump tariffs continue at this rate. I think a few of the capex-oriented industries, which might include a few cement players, which might include a few pre-engineering building developers. I think these players can continue doing well because order books are decent, more orders can come their way, orders are coming at a decent margin and they're executing well. Again, within the consumption theme, I think select apparel makers were domestically driven completely and focused on rural and semi-urban areas. I think with a consumer push through and consumption pullback that comes through, my own sense is that these players can continue doing well. And again, I think these sectors actually have no bearing in in any sense or every sense of what Trump tariffs that it's completely domestically driven. The sourcing that happens in terms of the raw materials are well diversified. They're well integrated industries as well. And end user demand is also very, very strong, sticky, and very decent.
And any key names from these basket of sectors that you're talking about that you are more bullish on that you could highlight for our viewers as well, Mayuresh?
So large names, L&T becomes a choice. Ultratech becomes a choice. Within autos, again, I think Maruti becomes a choice within the larger names. Auto ancillaries, Uno Minda is something that we have added to our model portfolios.
Okay.
A very, very attractive auto anchor.
Okay, fantastic. So within the autos, I think I'd like to delve a little deeper again. There are, of course, expectations that the GST rationalization will bring down the cost of, small cars and two-wheelers. pretty much more than the large ones, because 8 to 10% is the kind of price cuts that most of the brokerage houses have penciled in, at least so far, and a cut from 28% to 18% should be able to ease some pockets going forward from here as well. But what we are given to understand from our sources on Business Today television, as we've been breaking in the last 2 days also on the channel, is that the high-end electric vehicles could be in for a surprise. From down of 5% GST tariff rates, it could go up to 18% odd, and that's something that could lead to some more expense that you need to do for high-end luxury EV players. So a Tesla, for instance, bikes, for instance, which are higher than 350cc in the EV basket, all of that could attract maybe more taxes. How are you looking at that play out, and what is likely to do in terms of demand when such changing of scenarios on taxation front is what we're going to see?
So lots of ifs and buts, right? But again, I think if you look at the FAME policy that the government has put out for EVs,
Yeah.
I think definitely need to encourage the EV consumption boost. By EV consumption, I mean that more EV adoption that probably takes place. And for that, I think even the infrastructure requirements have to improve quite drastically. And therefore, government incentives, Sakshi, in my opinion, will continue at a very strong pace as far as EVs are concerned. Whether there is a higher rate of GST for super premium cars, etc., I think it's largely unknown at this point of time. And even if that happens, you look at the trend of what has happened over the last year and a half. Even in the last few quarters, when autos were going through a little bit of a sticky patch, the high-end vehicles had a very, very good show. So I think the demand propensity and the expectations in terms of owning of high-end vehicles is restricted to a select audience. And I think for that audience, paying a little bit more of the pocket, going historically as we've seen, where high-end vehicles had a very good run in spite of a patchy phase for auto vehicles or for the auto industry in general, I think it should not have an impact. For the larger auto universe, I think where the mass consumption probably happens within that select bracket of semi-luxury cars or entry-level cars. I think with GST rationalization, I think the demand might actually come back very, very strongly. Again, input costs largely have stabilized. And therefore, I think the end user demand, in spite of competition with new launches expected to take place, might actually do well going forward. So I think I do not see much of an impact happening, even if those rates probably go higher for the super premium cars.
Okay, fair point. Let me just quickly highlight for our viewers what's happening on the Nifty at the pre-open stage where it's settled. 24,466, mild down tick of 34 odd points is what we have. Some of the sectors that could continue to reel under some pressure from yesterday are the banking spaces, real estate, even the broader markets. For instance, some losses on autos, oil and gas could continue, whereas I can see some uptick that could be seen on metals, on FMCG, on IT. For instance, as well, some stocks that could be opening on a higher note are SBI Life, Geo Finance, Tata Steel, Adani Enterprises among the stocks that we could definitely focus on too. Let's now shift focus to, we'll again come back to the markets when they open now. Mayuresh, the other key factor is the absence of FII. The foreign institutional investors that have been staying at bay. How would you really look at them, looking at the Indian markets with all of these reforms taking place domestically?
No, I think they've always been chasing growth. And in the Indian context, I think growth had been lagging over the last few quarters, clearly reflected by slower earnings. But I think with a lot of reforms expected to take place, I think what is really happening or expected to happen is if earnings start coming through, I think FIs will be bound to come back. Obviously, I think this period of uncertainty when it comes to tariffs, etc., is something that FIs would normally, I think, uh, draw back or claw back on their positions and go back to safer havens, specifically, I think, in dollar-denominated assets or the mother market itself. But I think as earnings start coming back, I think FIs should come back. Until that point of time, as we head into Q2, Q3 or the end of Q3, when there is a lot of uncertainty about earnings coming back very, very strongly in the Indian context, I think they might not have any choice but to return back to the markets. Until that point of time, in my opinion, again, a lot of the tariff uncertainty related issues will largely be behind us.
Absolutely. All right, we'll also focus on the other key macro data that we will all be waiting for in the evening is the Q1 FY26 GDP preview and the review that we will be getting. Remember, as the most of the brokerage houses and even economists on our channel have penciled, is that a 6.6 to 6.7% kind of a GDP growth could actually come in. Now, when you look at a quarter on quarter, this will actually look like it's a slowdown, but this could be one of the better off quarters that we could be looking at going forward. There could also be mixed trends in the quarters to follow, basis what's happening on the tariff front and basis what's happening on the GST front as well, as we are given to understand. Now, a lot of economists that we spoke to did also point out that by the end of the year, they are now penciling in a 6% kind of a growth for the entire fiscal year. There could also be an uncertainty of that 6% breach on the lower end in case the tariffs continue to stay at where they are by the end of the fiscal year too, and if there is no breakthrough on that front as well. So that's a key risk that we are looking at. Mayuresh, your own sense, if we grow at 6.7%, 6.6% in Q1, and going forward, if there is a risk of ongoing uncertainty, how does one really look at it, and how will markets look at these numbers?
Again, I think it's a decent number, and I think the markets might be a little bit more forward-looking, Sakshi, as you just mentioned, because I think what happens in the forward numbers for GDP because of Trump tariffs is something where the concern of the markets might lie. Yeah. But again, as a base case scenario, my own sense is that there will be resolutions that will come through. I don't think it is sustainable to have 50% tariffs. And I think with the tariff impositions across the globe, how does the US demand actually stand out in the next couple of quarters is something to be seen. So I think there are a lot of moving parts as we are just discussing. If it happens, obviously, and if this continues, I think the consensus, as you're rightly saying, is a 60 pips hit on the GDP, which means that even if we do a 6.7 this time around, it might just claw back to 6% if this continues over the next 6 months or even beyond that. Does that get compensated with GST rationalization? Yes. To what extent? Maybe a clawback on those numbers as well. But is this number relatively better on the GDP print compared to a lot of nations across the globe? Absolutely. So I think if you look at relative context in terms of our GDP compared to the rest of the globe, in terms of tariff impositions itself, that a lot of countries are also are undergoing through, I think we are far better off. But I think sanity should prevail, and we should have some element of resolution over the next few.
Okay, sanity should prevail is what we are given to understand. Let's hope that it does, and we'll actually look at how it pans out in trade. Let me just highlight a few stocks then. We are just about a minute away from the market opening. So RIL, we've already marked out. This will be important to watch out because it's the 48th annual general meeting, and about 44 lakh shareholders will be addressed by Chairman Mr. Mukesh Ambani, and also the rest of the key stakeholders of the company as well. We will also be looking at ICICI Bank today. The lender has announced its board has approved an early retirement request for Subir Saha, the Group Chief Compliance Officer there. That's the one company-based news, corporate development that you should be looking at. Muthoot Finance will also be in focus. It has infused about 499 crores into its subsidiary Muthoot Money through an allotment of 3.25 lakh equity shares. So keep that in focus as well. The funds will be used to strengthen subsidiaries capital base going forward. So that will be also in focus. We now have the fresh tick. So let's quickly look at the market. 24,500, and we are toggling around that level, at least for now. On the stocks front, we have Kotak, that's on a higher note. You can see HUL also starting on a positive note. Geo Financial Services, ITC, those are the key stocks that you could be looking at on the positive side as they are starting on the Nifty. FMCG is the top moving sector with about 0.4% gains coming in. Private banks, infra, financial services, these are all the sectors that are still trying to hold up a positive in trade. Realty, autos and consumer durables, although starting on the back foot at least for now. India VIX is actually down by 0.3%, so that's convenient. 12.14 levels is what we are seeing India VIX currently at. Which are the stocks that are not doing well? You have Apollo Hospitals, Wipro, Shriram Finance, Mahindra & Mahindra, all these stocks that are dragging. On the F&O front, you have names like CG Power, RBL Bank, Colgate Palmolive, Sanman Capital as the stocks that are holding up. Whereas on the declining side, you have Nykaa, Phoenix Mills, Sona BLW Precision, and even M&M that's starting on the back foot. So realty and auto, two sectors that are tracking, but rest of them have all pulled up in trade. Signs of recovery can be seen on the broad-based moves that we are seeing in the markets right now. Let's also look at welcoming our technical guest. Mr. Kunal V. Parar will be joining in. He's the Vice President of Technical Research, Choice Equity Broking. He'll be with us shortly to discuss with us and decode the key levels as we start off this new series on a positive footing. 24,543 now coming in, as well. But clearly, like you pointed out, Mayuresh, the FMCG space is going to be in focus. Consumption space is going to be driving the recovery from here on. This has been a fairly laggard space to look at in the last couple of years. There's not been much move. So in case one has to choose between some of the stocks on FMCG, are you looking at large caps? Are you looking at some of the mid-tier ones? Which ones have a better capacity to move up sharply than the others?
So generally, I think this space should do well, Sakshi, and I think within this space itself, our top pick remains Marico. I think the volume growth in the past quarter was decent. You are expecting a decent growth happening for not just parachutes, Apola, but even the value-added hair oils. The food business is where I think the management is extremely positive when Dango about international business holding up well. Input costs have moderated for the sector as a whole. And therefore, I think volume should start picking up quite significantly, both in urban and rural areas. Realization should be better, and that should play out very positively for bottom line growth and return ratios. So again, I think as a sector, my own sense is that generally, I think FMCG should do well with consumption expected to make a very strong comeback. Marico remains our top pick within the sector.
Okay, Marico is the topic. We'll keep an eye out on that. Kunal is with us. Hi, Kunal. Good morning to you. Tell us as we start off this new series, so what's your expectation on the Nifty Bank for this series as a whole?
Well, but obviously expectation is on bounce back side. No doubt, we have seen a healthy correction in this week, but Nifty has a strong support at 24,350 level. So we may see some kind of bounce back in the Nifty itself. And if we talk about upper side level, the way Nifty has been trading on a daily chart, I think this bounce back would be up to the level of 24,800, and if Nifty sustain above this level, then further upside would be there. So overall expectation is related to the bounce back side only. Closing is at 24,542. And if you talk about the Bank Nifty, then Bank Nifty has given a closing at 53,928, and downside strong support has come at 53,450. So again, same goes for Bank Nifty as well. We may see some kind of bounce back up to the level of 54,500 to 55,000, whereas 53,450 will act as a strong support.
Okay, fair point. I hope this has helped all our traders and viewers to note down these levels. Two stock ideas, Kunal, for today. What would those be from your end?
Well, if you talk about stock ideas, then one to two stocks are there which looks very attractive. And one is Hindustan Unilever, right now trading at 2691. Mayuresh Bhai also has given Marico. I think in actual from my side, it looks very attractive on a daily chart. No doubt, stock has already given a breakout, but I think from present level, we may see a further upside momentum in this counter. Right now, stock is trading at 2693 and downside support comes at 2612. So we will keep SL at 2610. And if you talk about target size, the way stock has been trading on its daily chart, we may see a good upside momentum up to the level of 2750. And if stock sustain above this level, then further upside would be there up to the level of 2850. So 5 to 6% of return we can expect from this counter in actual. And if you talk about another counter, then Asian Paint looks very attractive on a daily chart. Stock has already formed its bottom formation. On a smaller time frame, it has already completed its rounding bottom formation, and from present level, we may see some kind of bounce back in the counter. Right now, stock is trading at 2523. We will keep SL at 2465. And if you talk about target wise, the way stock has been trading on its daily chart, a pretty upside momentum would be there up to the level of 2570. And if it stock breaks this level, the further upside would be there up to the level of 2645. So from my side, it's Asian Paint and Hindustan Unilever.
Fair point. So, two stock ideas that you've got from our technical expert too. Mayuresh, coming back to you, the onset of the festive season, and we have this domestic triggers that we've been talking about as well. Apart from autos, FMCG, anything else that comes to your mind that will be better played off in the festive season to follow till the rest of the year?
No, so again, I think certain stocks within a few spaces like footwear as an example, right? Because if
Okay.
there is rationalization happening on this front, footwear stocks should make a very decent comeback. They have been beaten down quite significantly. So there is a good amount of risk reward that might actually play out for a few of these footwear companies. Because as consumption comes back, I think it will be entirely bottom up, in my opinion, Sakshi. And therefore, have a watch through in terms of how these footwear stocks react. You're putting in Relaxo, there is Campus, etc. I think a few of these players might actually have some element of strong showing gradually. But again, I think the risk reward might actually stay in their favor. So I think one of the other consumption baskets might actually be footwear as well.
Okay, so footwear stocks is something that we could definitely be looking at. That's an interesting space to look at. But I also wanted to ask you something on the large cap spaces, the IT and the banks of the world. How are you looking at that, especially the banking space? I'll start off with that because we are talking about a tariff impact on a lot of these labor intensive, capital intensive sectors. Do you think banks that have a large exposure to these sectors will also be looking at an interim trouble with respect to asset quality? Is that a risk that you're looking at with the banks for now?
Possibly, Sakshi, but I think the other element here is with the declining interest rates, I think how is deposit accretion going to happen? So I think what you probably saw ICICI Bank do in terms of ensuring that they have a decent amount of premium CASA accretion where they've kept, or at least they're trying to keep their accounts at 50 odd thousand rupees. I think how will that element grow, specifically deposit growth? I think that is going to be critical for the system as a whole. Again, I think the readjustment in terms of rate will happen with a lag effect, both in terms of lending and deposits. And therefore, I think the NIM compression that you've seen should largely be behind us as we head into quarter two or quarter three. The second element in terms of asset quality pressures, I think they're not so profound at this point of time. I think a lot of banks are selectively probably lending at this juncture, looking at risk weightages across sectors that they probably lend to, along with a lot of the other elements that have to be put in place as far as delinquencies are concerned. And therefore, I think when it comes to a lot of the sectors which might be at risk at this juncture, I think there are obviously risk-weighted averages that the bank probably will pay out with. So asset quality, at least at this juncture, does not seem to be something which is a cause of concern for the sector as a whole. But generally, I think the growth in balance sheet dynamics will be very, very selective across these spaces. So I think we still continue to prefer leadership names in the private names as far as the BFSI space is concerned.
Okay. And what about the IT space? We do know that there's not a direct impact on the tariff front on the IT sector, but of course, indirectly, we'll have to see how the industries shape up, how the economy shapes up, and what does that do to our clients which are based in the US. How would you play the IT story? It's been beaten down again for some time. The earnings were pretty disappointing, and we've seen that reflect in the stock prices as well. Do you think is there a case for buying the dips on the IT space, or is it still going to be in a lower trend for some more time to come?
No, I think there is a lot of uncertainty around still, and therefore we we are underweight IT for a long, long time, and we still continue to remain underweight actually on that. The only stock that we remained a little bit optimistic about was Emphasis, and that's done phenomenally well, continues to do so. Purely because of the fact that a lot of the AI part of the business that Emphasis carries through is significant on their books, and every passing quarter they are probably having a good share of AI generated business, the kind of investments that they're making across AI platforms, which is yielding results and which will keep on yielding results. So I think outside Emphasis that we had remained optimistic about, largely I think we're underweight.
Okay, fair point. Bringing in Kunal yet again. Kunal, help us understand any key sectors that will draw your attention from here on. Which are the sectors apart from FMCG consumption that you talked about in the key stocks that you're looking at right now?
Well, if we talk about another stock sectors, then I think Nifty IT looks very attractive because since last many days I have been tracking these sectors, and a few stocks are there which looks very attractive. It's TCS. If you talk about TCS right now, stock is trading at if you talk about TCS right now, stock is trading at 3104 level, and we have already witnessed a breakout from its range bound momentum in this counter. Right now, stock is trading at 3104, and strong support comes at 3050. So one can keep SL at 3050. Right now, stock is trading at 3150, 3105. And if you talk about target wise, I think the first target would be at 3150. And if stock breaks this level, then further upside would be there up to the level of 3215. So TCS looks very attractive now. I have given this level only for trading perspective, but this stock also looks for long-term perspective and only also. So anybody who want to create their fresh portfolio, then I think TCS would be the first candidate for that long-term portfolio. Not only this, I think HCL Tech also looks very attractive from the IT counters. Right now, if you talk about a particular counter, 1456, it's a CMP. And if you talk about target-wise, we may see first target at 1525, and if stock breaks this level, then further upside would be there up to the level of 1600. So even Infosys looks very attractive with strict stop loss of 1440.
Okay. Mayuresh, coming back to you, before we let you go, help us understand, are there any sectors which you are completely staying away from, that you believe are going to be a continuing to be drag, when it comes to towards the end kind of a year performance, next 4-5 months or till the end of the fiscal year as well, that's going to be a non-performer so that one can just avoid looking at those spaces?
So as I said, Sakshi, I think IT is something that we remain underweight on. Metals, I think I'm not really sure at this juncture because it's dependent on a lot of global factors and a lot of global news flow, which seems to be very fluid and uncertain as we speak. So I think these two sectors is where I think we are underweight on. We'd like to ideally watch how things unfold for both these segments.
Okay. And what is your overall outlook on the Nifty now, given all these uncertainties and yet some reforms push back home? What's your outlook on the Nifty for the rest of the year?
So I think if the tariff uncertainties continue, I think Nifty might just be consolidating at the lower end of the range. Very difficult to predict levels, whether it will correct 3%, 5% from the current levels, because it really depends on the macro impact of tariffs, not just globally, but what kind of an impact that is actually putting on India. And how does that get offsetted in terms of our consumption boost? With GST rationalization, the hope is consumption will come back very, very strongly. But whether that happens, I think that is one element that numbers will tell us. And therefore, I think markets might go through a phase of uncertainty. Q2 numbers might still be a little bit soft because it's a quarter which is led by monsoons, a quarter where recovery will still be taking shape. And therefore, I think ideally, as you head into the festive season, which starts ideally in October, Q3 numbers will be a baseline fact quarter for us. And if we get those trends on a monthly basis as far as auto numbers are concerned, consumption patterns are concerned, which are encouraging and offsetting the kind of impact if Trump tariffs still persist, I think there is some element of hope that earnings will come back. But till by that point of time, at least till the end of this calendar year, I think it will be still that drag and that consolidation that markets might still probably go through. Certain sectors, as I said, certain stocks, as I said, which are more domestically attuned, might still outperform and continue to.
Fair point. Okay, Mayuresh, we'll drop you at that. Thank you so much for being with us on the program as always. It's so wonderful to hear all the insights from your deep research, and that truly helps us out, give us a clear picture, and we have to be prepared for both the good and the bad, and you clearly draw out that for our viewers. So appreciate your time with us as always. Thank you so much.
Thank you, sir. Always a pleasure.
All right, viewers, we'll continue our conversation with Kunal now. 27 points of an uptick is what we see right now, Kunal. Our first 15 minutes of the candle is already formed. Will this be an up day after days of weakness?
Yes, as we said, 24,350 is a strong support. Right now, Nifty is trading with marginal gain of 20 points only, but we have to give some time till 10 a.m. So, this volatility gets settled down, and even after 2 p.m., we may see some kind of bounce back as well up to the level of 24,650. So, I think if anybody has created a long position, then hold this position with strict stop loss of 24,350. Good bounce back would be there in this September expiry.
Okay, got that. I hope this has helped all our viewers out get a clear sense there. Let me now come to some stock specific moves, and we can ask Kunal to help us out as to what's to be done on those key stocks. Let's look at the broader markets, mid, small caps, Nifty 500. It's been under pressure. Of late, during the times of uncertainties, both these spaces of mid and small caps have underperformed the Nifty and the Nifty bank at large as well. Let's find out what is happening here. Anything in the broader markets that takes your attention? What's your overall approach on the broader markets, Kunal?
Well, if you talk about broader market, then but of course a selective approach would be there. No doubt, we have been witnessing some selling pressure on a broader market. And if you talk about overall advance decline ratio, then since February 2025, I think this is the time where we have seen the lowest advanced decline ratio, which stands at 0.94 level. So overall, it indicates oversold territory, and we may see some kind of bounce back as well from this. Level. So no doubt, negative sentiment is there, but yeah, it has been trading in the oversold zone. So bounce back would be there. And if you talk about Nifty 500, Nifty 500, Nifty mid cap, Nifty small cap, then but obviously selective approach would be there. And if you talk about stock specific, then one to two stocks are there which looks very attractive from this mid cap and small cap. If you talk about particular stocks from this Nifty mid cap, then the way stock has been trading, I think one can keep an eye on Raymond. The way stock has been trading from its reality counter. Further upside would be there in this counter, and one can get into this stock at present level trading on its daily chart. We may see some kind of bounce back up to the level of 4 to 5%. Right now, stock is trading at 618 level, and the way stock has been trading on its daily chart, further upside would be there up to the level of 650 to 660, and one can keep as well at 590 level. Not only this, I think even Ola looks very attractive on a daily chart from its mid-cap counter. The way stock has been trading on its daily chart, right now stock is trading at 56.64. One can get into this stock at present level with strict stop loss of 50. If we talk about upper side target, then first target comes at 60, and if stock breaks this level, if stock sustain above this level, then one way rally would be there up to the level of 80. So Raymond, Ola looks very attractive. Not only this, but even one can keep an eye on Colpal from this mid-cap stock from FMCG counters as well.
Yeah, Kolpal is the top mover on the FNO space as well today, so that's also on the move right now, rightly pointed out by Kunal. Let me also welcome our other guest, Mr. Kranti Batini, Director of Research, Wealth Mill Securities, is now joining in to share with us a wide view on the markets as far as the strategies that you must be following in the markets in these times of uncertainties is concerned. Welcome to you, Mr. Batini. Thank you so much for taking the time out. Good morning. First up, your key expectation from RL AGM today. How are you looking at this AGM? What are the key takeaways that you're really looking out from? Any key triggers that could come in this 48th AGM that could probably lead the stock to re-rate from the current levels too?
Yes, Sakshi, good morning to you. Yeah, big day for the markets. RIL AGM always considers to be the largest AGM for the markets. And the news expectations for this AGM is by and large a roadmap for the value unlocking. That's what the market has been anticipating, and this has been long due. The value unlocking and the roadmap is market what looking at this point of time, and also the new green energy initiatives the company has been making, like the gigafactory announcements and all the progress. That's what market want to hear it from the chairman's speech. By and large, the deadline for the geo and also the value unlocking, like in terms of the consumer business, the retail business is concerned. That's where the investor expectations from RIL at this point of time.
Okay. On the stock price, Mr. Patini, how is your expectation, from here onwards, and what is the strategy that investors must adopt on RIL ahead of the AGM announcements?
One thing, Sakshi, Reliance is a stock not to be gauged on a quarterly performance because of the capex cycle they are going through, and also
Yes.
recent uncertainty over tariff and all. By and large, if you compare the sum of the parts business, there is a lot of embedded value in terms of the Reliance Industries value is concerned. So investors with a long-term horizon, definitely, still the stock can deliver what it delivered in the past 10-15 years. It can deliver, but it's not the stock to just to look for last AGM to this AGM performance or Q1
Sure.
90 days quarterly performance. This is the misconception for Reliance Industries. Normally, the new investors who tend to invest in Reliance Industries and tend to nag on the stock price performance in the recent past. This is the stock to look forward for at least 3, 4, 5 years kind of horizon, given the kind of the business model the company drive through. And also, since the company has been the largest market cap in terms of the size is concerned, so it takes to deliver in the medium to short term, but definitely for the long term, any dip in Reliance Industries, it's a warranted buy.
Okay. Let me also get Kunal's view here. Kunal, technically speaking, how is Reliance placed on the charts right now, and what's your suggestion on this one ahead of the AGM to the traders who may be looking at this as an interesting opportunity to look at the stock as well and to take some position?
Right now, stock is trading at 1382, and from my side, it's clearly avoiding because the stock has been trading in a range of momentum. And not only this, in this week, we have seen healthy correction in this counter from the level of 1430. So, further downside would be there up to the level of 1360, 1350. So, I'm not suggesting to go even for short in this counter because risk reward is even is not for favorable for any shorting position. So, I think one should avoid this stock because ahead of this AGM volatility will be very high and no one will get the proper SL in this counter. So it's just like sit aside and just keep an eye on this stock. Nothing to do in this counter as of now.
Okay, keep a watch on it, but don't take either positions. Avoid at this point in time ahead of the AGM. One has to let the event pass out and then take a decision, is what Kunal's view is on that front. Mr. Patini, the other key important part is, of course, today's GDP announcements that the markets will, of course, be reacting to on Monday now. After the GDP announcement is done. For Q1, there's a wide expectation that the markets could be expecting a 6.6 to 6.7% kind of a growth on Q1 FY26 GDP. But what will this be important by way of is that this will be the first quarter of what is to follow for the entire fiscal year. And we're already looking at a change of world order, policy changes, reforms pushed domestically to support the indices which will be hit because of the changing world order. All of that is also to come into play. Plus, what kind of a burden will the government have to bear because of GST rationalization for that matter, or if there is any financial assistance that's doled out to the sectors that may feel the pinch of tariffs. If that also happens, then what's the case in point? So how are the markets really looking at how the growth scenario is playing out? That's one of the key macro numbers that the markets watch very closely.
Absolutely, Sakshi. You are absolutely nailed out and explained in a nice way. But the Sakshi, one thing to go, look at the GDP numbers is still we are one of the largest and fastest growing economy in the world. And 6.7 at this point of time, given the kind of the world order and also the geopolitical environment that is going through, it's a decent number to be at this point of time, but it's not enough. The plans of the government to double the GDP, this is not the run rate we can sail through at this point of time. At some point of time, the government have much levers to accelerate the pace of growth. Still, our monetary policy, we still maintain a tight liquidity monetary policy. So these kind of levers are still there with the government, and we have the current account deficit that is which is favorable for us, which the government has consciously narrowed down in the past 36 months. That's the reason we got the rating upgrades for the nation. So we have much more levers to leverage further in terms of the pace of growth is concerned. So Indian economy, we learn to take the decisions in a hard way whenever there are external shocks and all. So we tend to take the measures with respect to the speed bumps that comes on our way. So I don't think so. At this point of time, there is no threat to the growth at this point of time. There are much headroom is there for the growth. So we may expect the capex cycle to accelerate in the coming days, and also there should be a the government in a hard way will realize that there would be a push towards the domestic consumption. So these are the factors one need to keep on their radar. But for the current GDP 6.7% is concerned, given the kind of a global environment we are going through, it is a conservative one at this point of time. I believe in the next couple of quarters we may touch the range of around 7% in the coming quarters on an average.
Okay, got that. And now let's shift focus to the GST theme as well. That's going to be a very important theme to, track for this entire series because first week of September, 3rd and 4th of September is what we are given to understand that the GST Council meeting is going to take place. That's where the final stamping will happen on the two slab structure which we are hoping to see now, a 5% and an 18%, where most of the goods will be taxed now from here on, and that could lead to a lot of tax relief for the end consumer as well onto those everyday items as well as those of consumption. That's why the consumption theme is being more talked about in our conversations of late. Viewers, you would have noticed that. So let's draw it down to key sectors and the impact, and therefore try to understand if there are any stock ideas that you could draw from there as well. So Kunal, starting off with you, you did point out HUL and Asian Paints as among your top consumption focus stocks that you are focusing on right now. Something that Mayuresh, when he joined in earlier, was talking about, that footwear stocks could actually come out of their long, hibernation this time around, because there is an expectation that the GST rates could be drawing down to 5% on footwear. So how are you looking at a Bata, for instance, Relaxo footwear, Metro brands? How are you looking at these key stocks? Do you think there is some opportunity here?
Well, but obviously, I think the way government is planning to roll out this GST implementation on a early basis, I think we may see some good upside momentum, not only in this footwear sector, but yes, but obviously, it will be like big boost to two-wheelers and four-wheelers as well. So let's talk
Sure.
about the relaxed footwear right now. Right now, stock is trading at 483, and we may see a very good upside momentum in discount from the present level up to the level of 520. And if stock breaks this level, then one way rally would be there up to the level of 600 level. So yes, I think one can get into the stock at present level. And if you talk about downside support, then time makes strong support comes at 450, so one can keep SL at 450. Now, if you talk about even for Bata, the way stock has been trading on its daily chart, I think one should wait, because no doubt the news is there and it's in favor for footwear industries, particularly Bata. But technical chart indicates further weakness in this counter, so one should avoid Bata. But yes, let's talk on the two-wheeler and four-wheeler as well. Right now, most
Hold
focus
that
will
thought.
be.
I'll come to the auto space, Kunal, in a bit. This was only for shoes that I wanted you to ask you. Now, let's talk about the pure play FMCG stocks with Mr. Battini now. Mr. Battini, we're hearing that a lot of everyday kitchen items will get lower taxed. Butter, ghee, cocoa powder, chocolates, cornflakes, toothpaste, for instance, all of that is likely to draw a lower GST rate of 5%. How are you looking at some of the incumbent players which deal with such products there? What is the kind of demand scenario that they are going to be seeing, and any key stocks that you prefer from this basket?
Yes, actually, always any rate cut for these kind of discretionary consumption is concerned, it would be beneficial in the medium to long term. So the stocks in specific, as you mentioned, HUL, for my radar, Nestle looks attractive. That's going to be the key beneficiary because of the GST cut is concerned for Nestle. As you rightly mentioned, the products you named, the chocolates and the butter and all. This is the basket of products the company is going to take. Has been Nestle is one of the key beneficiary with respect to the GST rate cut is concerned. And the Colgate, the stock has been in a consolidation phase, disappointed earnings from the past couple of quarters. But given the kind of current momentum and the business strategy the company is making, it looks attractive to me in the medium to long term. So Colgate and Nestle would be my favorite picks in the consumption theme FMCG is concerned.
Okay.
ITC also can be the beneficiary somewhere in terms of the consumption. Of course, the
Sure.
cigarette revenue carries, but any kind of rate cut in the higher end, this company is going to get benefited.
Okay, fair point. But there's also this other factor that probably in the sin goods category, which may attract 40%, there could be tobacco that could be brought in there. So that could be one negative impact also for ITC. We have to watch that for out as well in the days to follow. Kunal, let's understand two-wheelers and four-wheelers. How are you looking at it? Most of these items are likely to now see an 18% rate down from 28%. So small cars, two-wheelers, which are below 350cc. How are you looking at these players at this point? Your top stocks.
Well, but obviously we may see some boost in this the festive season, particularly in this two-wheeler segment. And if you talk about stock specific, then one can keep an eye on Ola is there first Ola because
Yeah.
right now everybody is eyeing on electric vehicle. Then but obviously Hero Moto because Hero Moto is recently launched it's a Vida product. It's a good electronic scooter, and then I think one should focus on TVS Motor. So one should keep an eye on these three stocks for their portfolio creation. And I think after this Diwali, we may see a very good spark in this counter as well. And from the four-wheeler segment, I think one should keep an eye on Maruti, and then I think M&M and Mahindra and Mahindra. No doubt, we have seen a very good upside momentum in the Maruti itself after this Sri Vada Pradhan Narendra Modi's GST cut announcement on 15th August. But yeah, any fall is then Maruti, then it would become a good buying opportunities because right now Maruti has more than 60% market share, so it will be like main beneficiaries. Then I think one should keep an eye on Mahindra and Mahindra. So all these stocks looks very attractive for long-term portfolio creation.
Okay, got that. Let me actually ask Mr. Batini also his top choices within the auto ancillary pack. How are you looking at that? EVs are high-end EVs are likely to get higher taxed from 5% to 18%. So there's, investors and the consumers have to look at it in both ways. The benefits could largely come to small cars and to, smaller two-wheelers as well. But the high-end EVs, they could be in for some higher taxation. How are you looking at that play out?
Yes, actually, as you rightly mentioned, there is some kind of dichotomy in terms of the higher end of the slabs are concerned. Of course, the government have to emphasis and give incentivize the high-end EVs. That is the one of
Yes.
the key demand. But the commercials are different. So by and large, two-wheelers are concerned. Of course, as rightly mentioned by the other guest, like the Ola looks attractive to me at these valuations. The recent quarterly earnings and also the company statements in terms of organizing their business is concerned, that given some kind of a confidence to the investors after the stock got uh, corrected from its high of around 125 levels. So valuations looks attractive to me, but still we need to wait and watch how the next couple of quarter results are going to pan out. Investors with high risk appetite can look at considering Ola at this point of time, but the moderate and the low risk appetite investors are concerned. TVS Motors looks attractive to me, and then go to the pecking list of Bajaj, and the final one is Hero Honda. So this is the
Fair
list.
point. Fair point. Okay, one more space that could see some benefits accruing is the hospitality space, hotels, which are rooms that are priced below 7,500, are likely to be taxed lower at 5% now. So we could see already there's a wave of travel that we are seeing, increased amount of travel, hotel bookings that are on the rise. Within India and outside of India, this entire travel theme is being seen as something which is a growing one. How are you looking at, Kunal, some of the hotel related stocks? Do you think those are in for some better volume uptick?
But obviously, I think yes, special rate is there. If room tariff is below 75,000, then GST will be like very much at lower levels. So Indian Hotel, ITC, EIH, Chalet, Kamath Hotel looks very attractive. But particularly, let's talk on this Lemon Tree and Kamath Hotel, because they have a category where they were on an average below 7,500 rupees. So right now Lemon Tree is trading at 169, and stock has already given a breakout of its strong resistance, which was placed at 160 level. So one can get into the stock at present level with strict stop loss of 160. And if you talk about target wise, then we may see a very good upside momentum in this counter up to the level of 176, and if stock break this level, then further upside will be there up to the level of 187. So on an average 10 to 11% of return that we can expect from this counter. So amongst other, I think Lemon Tree do better for our viewers and investors.
Okay. Let me ask you, Mr. Bathini, any other sectors or stocks that you are keeping on top of your radar for the benefit of GST to come in that you could highlight for our viewers?
Sakshi has mentioned, okay, the stocks in the consumption theme only, the key stocks to look at that can be divided between the autos and also with respect to the consumption is concerned. These are the major key
What about
themes.
consumer durables? Anything within that basket?
We need to wait and watch, Sakshi, because the
Okay.
festive season is on, and also definitely it's going to have some kind of emphasis. But we have the limited list of stocks, and also the consumer durables is one thing where the accelerated pace, how it's going to pan out. It's not the theme to look at immediately for just a quarter-on-quarter basis. Definitely, it's going to have a positive impact. Any reduction on the GST is concerned, but the stocks are completely fully priced in at this point of time. We need to wait and watch for the price level to watch in.
Okay, got that. All right. Thank you so much then, Mr. Bathini, and thank you so much, Kunal, for being with us on the show today and helping our viewers, guiding them through which are the opportunities that they could look at in the current realm. Let's look at the markets again. 24,495. We are mild 4 points down in trade. Let's see how this day really pans out in trade. First day of the September series, while the last day of the week. Let's see how this really pans out in trade too. And we'll continue to get you all the market moves with top market masters guiding you through the course of the day. So stay tuned with us. Remember, there'll be also a coverage in the closing edition on Reliance Industries AGM and decoding that with top market masters as well. We'll also be, of course, answering all your questions that you have on the stock portfolio at 12 noon on Daily Call. So stay tuned for that as well. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is a special edition as far as GST 2.0 reforms are concerned. What we are